Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Chris, the Nasdaq hitting a record high. What's behind that?
Well, the Nasdaq really took the lead early on. Once the stock market bottomed in March, it really ripped to the upside. Obviously, everyone contained and confined to their homes and starting to have to work from home. I mean, all those tech companies really started to take off, especially the internet companies, and that really fueled the Nasdaq to higher prices. Also, Amazon, obviously, just killing it with earnings. Everyone's ordering all their stuff from Amazon. That really fueled the fire to the upside for the Nasdaq, and it's interesting because you don't see it so much, but the tech stocks took a little bit of a sidestep the last several weeks, and the Nasdaq continues to go higher. But overall, we are seeing sector rotation, and it's right now the Nasdaq has just broken to all-time highs, and it's all over the media, and that's really fueling the fire today. The stock market is actually down pretty sharp today. It was down over 2% at one point, but the Nasdaq is the only index ripping to the upside, up 1%. And I think that is media-based because everything else is below the recent February highs. Now that the media is talking about Nasdaq hitting new highs, everyone's piling into those stocks and to that sector. And really, it's ripping to the upside.
Chris, I think you've warned us in the past when people start talking about it, especially the mainstream media, that's not the best time to be getting in.
Well, this is exactly it, and I did a really detailed video explaining this type of scenario where everything is now, in the media. We've got all-time highs. Everyone is piling into the stock market, and not only that, but they're buying lots of leverage. The options market is just going crazy with everyone buying call options, which means you're leveraging yourself to the upside, expecting price to continue to rally. And the crazy part is the option level right now, the amount of calls being traded, is the same level we saw in February just before the market top. And we also have a cycle top. There's a lot of things coming into play, but one of the strongest indicators is my email inbox of people freaking out that this rally isn't going to pull back. They have to get in or they have to cover their shorts. I mean, a lot of people are on the wrong side of this, and that's what makes the market rally. But now we're at the point where people are emotionally being pulled into the market. They have to get in. They're missing out. And that's where things are coming, where the tire is going to meet the road here in terms of getting some traction to the downside, because this is looks to be a blow-off top in the market, and it's probably going to take a few more days for this momentum to stall out. But I'm expecting we're going to see a very sharp reversal this week or next week.
How should you be playing that?
Well, I mean, it's really hard to get long in the market when it's at resistance, like the SP 500, the other indexes, they're all at near resistance. So there's not a whole lot of upside on those until they break out. And they're also very overbought, and with sentiment also at an extreme, you don't want to get long here. The best play right now is to sit in cash, let the market show signs of a reversal that it is topping, and then you could play an inverse ETF on the way down, or you could potentially move into a bond ETF, which will rise as the stock market starts to roll over and fear hits the market. And that's what we're starting to see today is the stock market in general, other than the Nasdaq, is down fairly sharply, but bonds are up, 1.4%. Gold is up over 1%. So there is money today starting to rotate into those very defensive, those risk-off assets. So those are the places you want to be, is either cash, bonds, or potentially even gold. And gold miners may actually shine during a pullback as well as a strong safe haven.
We'll have more with Chris Vermeulen right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, are gold juniors still a good bargain?
Well, I mean, they are setting up a very strong pattern. If gold continues to move higher, the gold miners should really take off, and I think there's a huge upside potential for them. Right now, they're in a consolidation mode or a phase where they're trading sideways. They're taking a breather. They have had a huge run from $20 a share to $47 or $50 a share. So they've had a pretty significant run. But overall, they should perform exceptionally well once gold starts to break out. And we could be very close to a breakout in gold. Simply, if you look at gold and bond chart, the daily charts of them are showing very strong bull flags that are pointing to much higher prices. And if gold starts to break and run, I think the gold juniors, the GDXJ, and the large caps, I think they're all going to start to extend and break out of these patterns as well, and really take off as a safe haven play. We saw this before 2008. We saw gold miners really pick up speed and take off just before the stock market started a potential leg down. And I think we're in a very similar situation where these are going to become kind of a hot sector for a while, and the stock market might struggle for several months.
When you're looking at gold juniors, very important to be selective and do your research.
Yeah, if you're trading, it really depends on your trading strategy, because there's a lot of different ways to trade gold miners, and there's a lot of different caliber of trades. I mean, so a lot of people like to go after ones that have very high cost of production, so that when it goes up, they get this crazy leverage on them. So you're really buying terrible gold companies, but if gold goes up, they become very profitable. Other people like to get revenue streams where they have royalties on multiple mines. It really comes down to what flavor, time frame, risk tolerance you have when it comes to trading gold miners, because there's about 10 plus different ways you can trade that sector, and they all vary dramatically depending on the company and how you want to trade it. So
we'll have more with Chris Vermeulen right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
How is crude doing?
Well, crude continues to hold up. It's on this high momentum run, meaning it's gone from $20 a barrel, and it continues to go up to this $38, and we haven't really had any correction. All we've seen is a pause at this point, and at this point, without a correction, it's kind of hard to get in because it's at a long-term resistance area. It hasn't really kind of corrected in a way to cleanse the market. There's a lot of people. It was a number one talked about thing back in April when it went negative, and I think there's a lot of people piling into that oil trade, thinking it's going up and up and up. It's very crowded. I think it's all momentum players, a lot of them, and when it starts to roll over, I think it's going to react a lot like a small cap momentum kind of trade, meaning everyone piles in for the good news, and then as soon as it starts to roll over, they all just jump ship and get out, and that price can drop dramatically, big down bars, and pretty much most of the gains gone in only really a few bars. So you look at this daily chart, to me it carries a lot of risk because it's a lot of momentum players in there, and we haven't broken any previous lows. Once we start to break some lows, I think there's going to be a ton of people jumping out of that oil trade. I think it's crowded, and it's going to collapse real quick back down to potentially that $20 per barrel or the $28 per barrel area.
Bitcoin, how's it doing?
Well, Bitcoin has been, it continues to trade sideways in this big range on the daily chart. It's trying to get through this 10,000 mark. You and I spoke, maybe it was a month ago, and it had just spiked up to the 10,000 mark. And right now it's been consolidating ever since then. And this is a bullish pattern that it is doing. It's trying to get through 10,000. It's building a bull flag. If it can break and close above 10,000, I think we're off to the races for a fairly significant run. Using Fibonacci extensions, it's pointing to more or less a run towards, let me just take a look here. It is moving towards, we'd be looking at somewhere around the $12,000 mark from where it is. That would be its kind of first significant run. So it would be a 20% move in Bitcoin that would happen fairly quickly. And the way it moves is sometimes it moves in overnight trading. It is a tougher one to trade, a lot like precious metals, where sometimes the moves happen pre-market, early in the morning, and you really can only trade the gap later in the day. If you're trading an ETF on Bitcoin, for example, there is a fund to follow it. But overall, Bitcoin is holding up, and if it can break that 10,000 and hold, I think we're going to 12,000 very quickly. So it's in a basing formation. It's kind of a dead zone right now. It needs to break out and clear that level before it gets really exciting.
Chris, how would you describe what's happening right now?
Well, I think right now we're seeing kind of mass kind of fear of missing out on the equities market. It just keeps going up and up and up, and it's picking up more speed the last couple sessions to the upside, and it's just got everyone in a frenzy. It's the way the market works. It's a lot of people are on the wrong side of the trade, and they're covering their shorts, or they're in cash and they're not in there. And this big move that's happening is just enough for people to give in and say, fine, I'll just jump in and I'll buy, and the shorts are covering. So we're getting a very emotional week here in the markets. I know traders and investors are just completely beside themselves with what's going on. That to me is a very pivotal point in the market. We're very close to a rollover. I think we're going to see lower prices. I know I've been calling that for a little while, but the key is you don't pick a top. You do not want to short a market like this because it could continue to rally. The key is wait for a pause or a pullback, and depending on if it's a pause formation, a bullish pattern, you can get long. If it shows signs that it's a reversal pattern, you can play an inverse ETF. So at this point, you really got to sit back, let a fresh setup happen. It's overbought. Wait for a new trade. And I think the safe havens are going to come into favor over the next week or two. Bonds and gold, I think they're going to continue to hold up as a little bit of fear creeps into this market.
Chris, thank you so much for chatting with us.
Hey, thanks for having me, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.